Welcome to ATFTV. I'm Christine Zhou reporting from London. Today we are joined by Dr. Chen, who is the Chief Analytic Officer of Pengyuan International, a global credit rating agency based in Hong Kong, which is where Dr. Chen joins us today to talk about the issues particular to local Chinese government ratings. Dr. Chen, welcome to ATFTV.
Hi, Christine. Thank you for having me.
Thank you. Dr. Chen, you have talked previously about Chinese local government bonds and about the differences between different Chinese provinces that may not be immediately apparent to investors outside of China. Can you summarize those differences, please?
Yeah, so as we know, before the budget law was amended, China's local governments are not allowed to issue a local government bond. But the situation has been changed since the launch of the new budget law in 2015. Now, 31 provinces and 5 selected cities are able to directly issue bonds for their own financing. And the local governments have rapidly become the key players in China's domestic bond market. So as a result, outstanding local government bonds has increased from 1.2 trillion renminbi at the end of 2014 to more than 26 trillion at the end of October this year. So when we assess the credit profile of China's local governments, so we need to consider the differences in economic development among the different regions and the levels of the local government. So in China, there are big economic gaps among the different regions. So in general, the better developed east and south coastal regions have a stronger credit profile than the western regions and the northeast regions. So we have seen a slow economic growth in the past few years for the regions which depend on heavily on the industry or the resource-related industry. So also, the economy of some Western regions are heavily investment-driven, and the economic growth might not be sustainable for those regions. So in terms of debt burdens, so some wealthy regions in China actually carry large sums of debt, but their leverage level remains moderate relative to the massive revenue and GDP scales. So as for the level of the local government, there are 4 tiers of the local governments in China. So currently only a tier 1 local government can borrow directly from the capital market, and we observe the huge differences in creditworthiness between the provincial local governments and the low level local governments. So higher level of local government, such as the provincial level, should have a better creditworthiness than than the low level or local governments. So the difference in the creditworthiness among the prefectural level local governments can be huge, and the gaps is even wider with the lower among the lower district and the country levels local governments.
China is currently attempting a deleveraging campaign. What will this mean for some of China's weaker provinces and also potentially unsound infrastructure projects?
Yeah, actually, we're not worried about the creditworthiness of the provincial level local governments in China. So I think China has resumed its deleveraging campaign, which was interrupted by the outbreak of COVID-19 pandemic. And as I mentioned before, there are gaps between the economic development and debt burdens among different provinces. However, because China's vertically integrated governing structure, we believe the central government will keep the provincial level government's creditworthiness in close range of its own. So the central government has been spent a lot of effort in balancing the economic development in China by offering greater fiscal support to less developed regions such as Tibet, Qinghai, and Gansu. So these weaker provinces' budgetary revenues have relied heavily on the transfers and the reforms from the central government. So this is actually a strategy of revenue reallocation in order to balance out the gaps among the local government's income. So by doing this, local governments with poor economic fundamentals are more likely to have a greater proportion of the transfers and refunds in their revenue package. So based on our assessment, we think the provincial level government's credit ratings should be no lower than 3 notches below the rating of the sovereign, the China's sovereign ratings.
Dr. Chen, thank you very much. These are fascinating topics for China and the world, and we hope we can persuade you to come back onto ATFTV again soon.
Thank you.
Thank you, Dr. Chen. And thank you all for watching. To read more on this topic, check out asiatimesfinancial.com for the world's best news on Asian markets, economies, and more. I'm Christine Zhou in London, reporting for ATF TV.